Welcome to my channel, Learn and Earn, to live your life on your own terms. Hello everyone, you're welcome to my channel, Learn and Earn Academy. And today in this video, we are going to talk about the recent initiative of government to boost the economy. Now, over the last few weeks and months, the opposition parties and the critiques of the government have been pointing out of the slowdown in the economy, especially in the area of job creation and the sliding growth rate of the GDP. Now, in order to overcome this criticism, the government has over the few weeks taken severe steps to boost the economy. And one of these steps is to reduce the corporate income tax. Now, this is going to have huge implications on Indian economy. And that implication is what we are going to study in this video. So I'm sure you would love this video. So let us see what the government has done. Now, Finance Minister Srimati Nirmala Sitharaman has announced major changes in the corporate income tax to revive growth in the economy. This has been achieved through an ordinance, the Taxation Law Amendment Ordinance 2019. Now, what has the government done? The government has reduced the corporate tax to 22%. No minimum alternate tax is applicable to such companies. So the effective corporate tax after surcharge and cess is 25.17%. So there are few countries in the world who have this kind of corporate tax in the economy. And India is one of them. Now we will also talk about those countries as well. Now, why has the government done that? The government has done to boost the confidence of the investors, to bring more funds in the country, to tell the world that India is a conducive place for doing business. So, to attract investment in manufacturing, local companies incorporated after 2019 and till March 2023 will only pay 15% tax. Now, this is going to be a huge decision. Any company which is opening from October 2019 to March 2023, which is a new company, will be paying only 15% of corporate tax. I can imagine how good as an incentive this is for a new company to start, for a new entrepreneur. The effective tax for new companies shall be 17.01%, including cess and surcharge. Companies enjoying tax holidays would be able to avail concessional rates post the exemption period. Now, it will give MAT relief to those opting to continue paying surcharge and cess. MAT has been reduced to 15% from 18.5% of the companies who continue to avail exemptions and incentive. Now, to stabilize the flow of funds into the market, an enhanced surcharge announced in Budget 2019, it will not apply on capital gains arising on sales of any security. So, any capital gain arising because of sale of any security, including derivatives by foreign portfolio investors, it will not apply on capital gains. This surcharge was announced in Budget 2019, but now it will not be applicable for any capital gains arising on sale of any security, including derivatives by foreign portfolio investors. So I hope this point is clear. For listed companies which made announcement for public buyback before July 2019, it is provided that the tax on the buyback on share of such companies will not be charged. Okay. Now, how do these rates compare globally? Let us see this. Now, There are only five countries other than India who have a corporate tax of less than 22%. These countries are Singapore 17%, Vietnam 20%, Thailand 20%, Taiwan 20%, Cambodia 20%, and sixth is India 22%. Now, this is a historic decision taken by the government. So, we are among the top six nations, Asian economies, which have a lower corporate tax regime. I'm sure this will certainly have a big impact on the market as well. So, what is the benefit to the people? What is the benefit to the economy? As I have already said, it will send a strong message to the investors. Now, India will become a hot favorite of all the investors. It will demonstrate the government intent to walk the talk on economic management, restore investors' confidence, and boost sentiments and demand. After the profitability dynamic of the Indian corporate system, it will alter the profitability. Now, many corporates will be able to break even much ahead than what would have been the case with earlier rates. So, the companies will be able to realize the money which they have put in their companies. Lower tax should ideally result in higher profit margin, which will eventually translate to lower prices for the customers, which is again a win win situation for both the customers and the people. And as I already said, if there is more profit, these companies will invest in more capital. So the capital expenditure will increase. Now, additional capacities will eventually, through a secondary round effect, will have a lot of employment generation opportunities as well. So it is going to have ripple down effect. Now, why has the government brought in ordinance to bring these changes? Now, changes in income tax, both corporate and individual, requires legislative amendments. These require parliamentary ratification. When the parliament is not in session, the government can bring these changes through an ordinance and later bring a bill when the parliament convenes. Now, we all know that ordinance is a way to bring a law operational. Now, this is a measure which the government has when the parliament is not in session. And within 6 months, the government has go to the parliament and get it approved. I'm sure these changes will not be a problem for the parliament to pass. Now, we are only seeing the good things from these decisions. Now, what are the concerns over this decision taken by the government? The major concern is the loss of revenue. Now, if corporate income tax is cut from 30% to 22%, the government is going to make a loss of 1.45 crore, I'm sorry, rupees 1.45 lakh crore. Now, this is public money. Now, this money would have been utilized for public expenditure, which will not be with the government now. But since the tax has been reduced, it will bring investment, provide employment, and will initiate or will push the economy and increase the economic activity of the nation. I'm sure the loss of 1.5 lakh crore is definitely going to be compensated. Now, we all know about fiscal deficit, when the government expenditure is more than the income. And since the government will be losing 1.45 lakh crore of its income, obviously the government will have less money to spend, and that is where the physical deficit will arise. So the target of 3.3% of GDP as physical deficit will not be achievable. I'm sure in this year it will definitely not be, but still the decision taken by the government has to be taken and seen into the right perspective, and things will certainly be better. So if you like this video, you can press the like button, subscribe to our channel, and share it on social media. Thank you.